Alright, what's up, guys? It is Anon. None of this is financial advice. This is for entertainment purposes only. Alright, so weird day. A lot of whipsawing. Big fight on the S&P for 380. Looks like the bears won. Let's see. What's going on? What's up, Spencer? You're first. Congrats. All right. What's up, Jerry? What's up, Anon? What's up, CC? How are you guys? Looks like I'm the first liker, though. Oh, congrats, Random. Yeah, thank you. Appreciate it. Let's see what's going on here. Let me go through content. Go here. All right. 2 days in a row, first liker was Random. Thanks, bud. Appreciate it. All right, so what's going on here? What's going on with you guys? Ready for tomorrow's rally or Monday? Well, you mean Tuesday. Monday is 4th of July in the U.S., so that will be a close day on the market. Yeah, after they achieve their goal with the goodwill stuff. Yeah, it's all going to depend on what's going on with the SPY, because, and I think I told some guys, or some of you guys, what's going on. Such a suck up, Random. So I was telling some of you guys that, okay, so what does smart money do? Because I was having a conversation with Alec about this, and I said, just curious about rotations, and I noticed, at least, I think it was him that I was talking to about, but basically when you have everybody was in the like S&P, right? So when the thing was going up completely to like all-time highs, just it seemed like every other week you were hitting an all-time high. All right, so the market's just this extreme bull market. This is the COVID crash, and then they just pump money into the stock market. And so what happens, everything's going into the big caps. Tech's blowing up. Everyone's like, this is the new normal, right? And I actually thought we were going to hit 500, and then we were going to go down. I should have known that it was going to be like some weird number, not all the way at the top. But anyway, so we hit the top here-ish, almost at 480. And then what happens, right? We start actually in this downtrend. And we had this break from it, and everyone's like, okay, we're going to go back up. Maybe this was just a downturn, and it's been tanking since then, right? So we're now in an extreme downtrend, and what do we have below us? Can I pull it back that far? Remember, I drew this line out for the people that have been watching. These are the gaps that were left from the November election cycle that I said we're going to fill at some point. And I think they will fill at some point. I don't know when, but they will fill at some point. You don't get all the way down pretty close to it, and then, we were only 20 points away from it back when we were here. So we'll get down to that level again at some point, which means that small cap stocks will also get like hammered, right? But here's the deal, right? So everybody's pulling out this money. So the smart money's been pulling out money since basically like here-ish. So you figure when you do a distribution, we can talk about Wyckoff real quick. So let's pull up a Wyckoff chart so you guys can take a look at Wyckoff distribution. All right, so we'll go here. We'll pull up. I want distribution. I don't want accumulation. Where's the distribution chart? That's accumulation. Let me go find one for distribution so you guys can take a look at that too. Wyckoff distribution. Oop, just saw it. And it can be seen in a lot of different, you can use it for any sort of charting, but basically the idea behind it is you're taking money out and you don't want to let everyone know, so you have to basically let it chop around. So let's see what this comes up as. Here we go. Okay. So stock's running up, or whatever you're looking at is running up, right? And you come up to this point right here, and then you have a sharp downturn, right? Everything else has been pretty much like, normal little like dips. And then you have these rips. This one here, all of a sudden, auto rallies back up. And then here is like where it starts getting interesting, because now this is basically them, smart money selling out. They get it down here, but then they always push it back up to make sure that they get everybody, buying back in, just because they're thinking it's going to look like this and keep going up and up and up. But what ends up happening is you start hitting these plateaus, right? And so this is when you get this ultimate rip. This is when you fool most retail and inexperienced traders, right? So they think, okay, market's going to tear again. We've had this nice move from, here all the way up to here. And this is when they are still, taking out their money, and then they're just selling, like this entire time, just selling. But this entire time they're actually selling. It's just they're making people think that there's still more upside, and then really what's going to happen is they're, selling, and then the next thing they do is they're going to dump, right? And so let's see what this one, yeah. So this one was a Bitcoin one, and you can see what they're basically doing is you're going through and you're having people sell while basically everybody else is, so they're selling into your buying pressure. So, you take a look at the SPY, you have this up, right, down, and then they've been taking money out, and this is now when they're dumping on the other side. I probably could make it look a little bit better on the 4 hour, or maybe even, but like you can see, like they come up, they're basically pulling out their money this entire time, right? And now this is on the downside. And those downsides get extreme because, most people have gotten their money out. So where do you put your money now, right? You're rich. You just cashed out your smart money, or you have people working for you that are smart money, and they're like, So what do they do? Well, cash you can't just sit on, right? I mean, you can, but like you're getting killed because of inflation. So what do you do with that? So what's beat down right now in the market, right? Like everything, right? But what's really beat down? So the S&P right now, I think, was down 12% for the year to date, or something. Maybe it was on the 1 year. Let me pull it up. So the SPY on the 1 year, year to date, it's down 21%, but year to date, it's only down 12% for the SPY, right? So let's take a look. So 1 year out, we're only down 12%, but year to date, we're down 21%, right? So, but check this out. So small caps, year to date, you're down 24%, and on the year, you're actually almost 27% down, right? So small caps are really beat up right now. So what I would expect them to do is probably rotate some into small caps, because at this point right now, you've got a lot more potential to make some money than you do on the large caps, which will still probably go down a little bit more. They're not as beat up as, this is pretty much beat up at this point. So over the 5 years, it's up 20%, but as you can see on the SPY, on the 5 years, you're up 55%. So like a fraction of what it was. So I could see like a rotation into small caps or mid caps coming up at some point. So, if you're in small caps, that would be a good thing for you, but we'll see. Yeah. So, for example, yeah. So I think these are the ones. Awesome. This 17 dude. You said like Fifi and Redbox and Rev all had decent days. Yeah, and I actually let me pull them up real quick. Yeah. So like Rev, we can pull up like Box D was down 5%, but let's pull up. They had like 8% day, I believe. I have actually sold some calls today. I had some 250s that I wanted to get rid of, and I kept 10, but I sold 50 of them at the peak, basically at the end of the day. And we make a continuation on this one, but I still have $1 calls on this one. And then let's pull up Redbox, right? Redbox I think was up like 8%, 10%, something like that. Was it 8? Yeah, it's 8. What I think is actually happening is they're actually covering some here. Yeah, so I think, they may be covering some here and then just push it down at the end of the day. My guess would be they've still got a lot to cover, but they're basically just going to hold it there, and they're going to eat whatever they have to in fees, because I know eventually their merger is going to come through, and then the stock will drop even more drastically. So just wanted to throw that out there. My wife just texted me. She's been at happy hour with her work colleagues, so I had to put the kids to bed. That's why I got a late start tonight. Sorry about that, guys. When Moon. Earthium. Every time. When Moon. When is the market gonna bounce? Who knows at this point? If I knew, we'd all be very rich, right? So, what I'm trying to do is this. Like, every time we had a green day, I keep trying to buy SPY puts, because I do believe that's the way that everything's going right now. Let me just show you guys. So I think something interesting happened today, and I'll kind of break it down for you. And let's go to the 1 minute on here. All right, so let's go to the 1 minute on this. Oops, made it a little too small, but all right, come on, get on over there. All right, so let's go back. This was a very important day for options, especially on Jim Cramer said there's more downside. He's right sometimes. I know that normally it's inverse, whatever he says, but like, okay, so let's see. So we started out right. It went down to what was it, like 372, and then we had this rip, right? So everyone's like, okay, maybe this was the bounce. We're gonna get good. We went up 8 points, right? So this is now starting to trade like a freaking penny stock on the S&P 500, right? So you're now hitting like 380, right? It double topped, and then we come back down and it starts dropping again, right? But we still finish. But the fight was actually for 380, and that's why this. If you look up here, there were literally like millions and millions of shares being traded, especially into the end of the day, because what was supposed to be happening is, I mean, there was a ton of volume just in general, but like, I mean, look at some of these. Like, you're talking about like decent volume coming through on this day. And the reason why is, if you look at open interest on this, you actually sit there and let me pull up a options chart. All right, let me pull it up real quick for you guys. But there was like a ton, like we're talking about like 1.8 billion in premiums on the put side. So it looked to me like there was a battle between basically two sides of smart money. Somebody was thinking that they might be able to squeeze a lot of like money out of the premiums, and maybe it was a market maker. I don't know who it was, but if they had gotten the stock to finish even just slightly above like 380, they would have burned so much money in puts. Like I'm talking about like billions of dollars worth of premiums on the put side they would have burned, because the 380 on the put side was just stacked. I mean, let me see if I can find that. All right, let's do this. I mean, it's pretty insane what you saw today as far as like the options chains. And, you know, that's where smart money, you know, does all their work. But I'll just do near the money puts and calls and just show you guys what this looks like. Say SPY. Okay. So look at this thing. And especially 380, right? So the 380 put side, they already had 104,000 open interest, and then they added another 107,000 in volume. Now, not all that's opening, but like that's a lot of volume. Look on the call side, 245K on the open. Like that's a lot of money. And some people were probably selling, you know, covered calls. Other people were buying. I mean, like, it just, this is a lot of, I mean, look what it was going into today, right? So, like, the open interest was a couple thousand on this. Like, 5,000 was at 375 on the call side, right? Look what got added today on the, like, volume. Like, that's a lot on both sides. Like, sure, and it's people opening and closing contracts, but I'm just saying, like, that's a ton of volume that happened today. Like, today was a busy day, and it was a fight. Yeah, wash trades to control the spot. Yeah, like, they're basically just trying to maintain either control or, you know, but, like, somebody was saying this, like, the majority of short hedge funds are short right now. And I can show you proof of that because if you go to Fintel and you go to their, I think it's called, let me see what it's called. Shorts, the big shorts. Like the people with the highest amount of like puts and shorts are like Citadel, Deer Park, CTC, like Parallax, Bank of America, Twin Tree, Group 1 Trading, Citadel Advisors, Millennium Management, Jane Street. Like, these are all hedge funds. So, like, here. Like, look at these put values. And look at these, the net shorts. Sure, they hedge their stuff with calls, but like they're pretty net short right now. Like they have a lot of money being short. So, if hedge funds are short, who would be long then, right? If you think about it, like who would be long at this point? I mean, the economy looks like pretty, but you know, would it be a BlackRock? Would it be the Fed itself? Pumping up their balance. There's a whole bunch of stuff that it could be, but it looked like today was kind of a fight. Obviously, it looks like the people that were short on the market are the ones in control right now. Bears are clearly in control. goodness. You ever had a hair fall out of my head and I'm seeing gray in it? Ugh. What's going on here? Old man. I'm not really old, but that was not fun. Gray hairs. All right, so let's go ahead and take a look. You've got mail anon. Okay, what do I got? I need to open up my Discord. Is that what's going on? Yep, I do. Okay. Okay. What is this that you want to look at? Anon has been getting eradicated by my computer. Yeah. I'm getting old. Getting old. My wife was teasing me. She's got more grays than me, but she dyes her hair. So. All right, so you want me to take a look at GC, what? GCMGW. What is this? So they are an asset management firm with over close to $60 billion under asset management. Okay. Hey, just got into the stream. Did you guys talk about Apron yet? No, I can do that. We'll go ahead then. You still have a full head of hair? Yeah, I've got a small position in Apron right now. So, but let me look at this real quick. So what do you want to know about these guys? They have warrants. Let's see. GCMGW warrants. Up 19% today. Interesting. And they're down. So is the underlying. So derivatives of the main holding, which is probably down. I mean, they look like they've got plenty of money. What makes you like these guys? They're random. If you can see they have warrants. Yeah, sure. All right. Many Latino, I got you. Hold on a second. Let's take a look for you. All right. So Apron, Blue Apron Holdings, right? All right. So let's paint you a little picture, right? In fact, anything I do in here, I should probably put inside the Discord. If you're not part of it, we have a Discord, and we can go ahead and anything. I'll just start screenshotting stuff and putting it in there. But let's go ahead and I'm going to generate a link for you. Put it in here. Thanks for liking the video. Appreciate it. All right. So if you're not part of the Discord, you can join. It's free. And then there's a section called individual snocks. And I put Apron in there. And so anything I'm going to do in here, I'll screenshot and put in there. All right. So let's start out with figuring out what's going on with these guys, right? I think we've done this in the past. I think they do have some warrants, but they're higher up, if I remember correctly. So let's take a look real quick. And I am allowed to show this on my screen because Sean from Dilution Tracker did give me a heads up and told me that was okay. Yeah, these guys are the ones that have them at like 15 through 20. All right, so let me pull this over for you guys. So this is Dilution Tracker. It's a great website. We do have a discount code through the. So if if you're part of the Discord, if you want it, I just need Sean to go ahead and approve that section, and then we'll go ahead and I think you get a certain percentage off if you're interested in these guys. But it's a great website because you can quickly go through and check warrants and get a pretty accurate snapshot. Like I find that Sean and his team are actually pretty darn good about making sure their numbers are better than most people's. Because I think they go through them by hand and make sure input, I don't know. But they're typically more accurate than most people's. Okay, so market cap 123 million. The float right now is 22.58 million, which is pretty small. You've got your estimated cash per share. Yep. All right. So, and then looks like ownership is about 27%, and your short interest is about 21%, roughly. So what I can tell you right here is the light blue is typically warrants, and there are about 11.14 of them, and they're listed right here. You've got November offering warrants that happened at 6.2 million at 15, and those are good, and they're active. So are these ones right here, which are 18, and that's 3.2 million, and you have another set here at 20 at 1.5, right? Who's the underwriter on this one? They're not listed, but this is your dilution shelf, and these are completed offerings, and they did do a private placement, right? So here's the deal with this thing. They've got about 5 months of cash left before they need it more, based off of their current cash burn right now. So what the shorts are likely trying to do is trying to make this last out 5 months, so these guys have to dilute, because unless they can run this price up to 15, they're not going to be able to unlock these warrants and get that cash out. So what the shorts are probably trying to do is they just need to last 5 months, and at that point the company will have to do something like issue out more shares to basically, it will dilute and then, allow them to cover and, But let's take a look at the short interest and all this stuff. So I will pull up Vortex real quick. And I feel like I should just give it a shot, because I want to just see if I can get away with just showing Vortex. I screenshotting it, and it's a pain in the butt, and I've heard other YouTubers do it. Have you guys ever seen other YouTubers pull Vortex over when they're talking? Or do they get in trouble, or they don't do that? Because, like, Sean gave me permission, but, like, for Dilution Tracker, but I don't know about Vortex. But it's a pain in the butt having to screenshot stuff and then bring it over. What do you guys think? Have you seen other YouTubers? Do they pull over like Vortex stuff and Finra or Fintel and all that stuff when they're streaming? If you can let me know, that'd be great. I'll wait. You haven't. Okay. Anyone else seen, like, I don't know, I'm pretty sure Trey's done it so many times. Okay. Trey's doing it. He's much bigger than I am. I would imagine that I've seen Roku do it. Okay. So if in that case, I'm going to do it and see what happens. If my video gets removed and I get demonetized for this video, then anyway. All right. So let's take a look at this, right? So right now, they think that there are about 5 million shares shorted, right? If you guys remember, the free float should be around 15 million shares, roughly, is what they're estimating. I'd have to go through the filings to make sure that's correct, or we could go through the 13Fs just to get a rough idea, but let's pretend Vortex is somewhat accurate. And let's say there's 15 million shares and 5 million of them are short, right? So, all right, so 5 million short out of 15, so that leaves 10 million that are left, right? So, let me just see. Utilizations started on March 25th. It's just retail exiting and stopping the squeeze as usual. Apron looks bad judging at all the long-term investors I see bailing on a nice spike. Yeah, so here's the deal, right? Like, retail's really, really nervous, and this is why they have trouble actually, kind of holding it together, is because they don't know what they don't know, and they don't understand how the stuff works. Typically, they can get easily shaken because no one's explained to them what's going on. Like, to them, if the short interest is going down and the stock price is going down, they assume that everyone must be selling, and then they're idiots and they haven't sold either. And, like, that's not necessarily the case. There are a lot of ways that they can make the price go down without actually, like, covering. But once they get retail spooked, then retail does start selling, and then they're able to, cover with those shares. So it's an interesting balance, and I think education's the only thing that can kind of, like, help that, because, like, retail traders, it's a tough thing to, like, watch money go up and down, up and down. Like, that's not a natural feeling. Like, you're literally, like, fight or flight, and a lot of people flight, and and then when you get stuck, like, you always hear the stories about, like, oh, well, you guys are just bag holders, blah, blah. If you wait long enough, all these stocks go up and all these stocks come down. Like, it's how the markets work. And as long as the company you're in does not get delisted, at some point they will rebound and they will go back up. And, maybe not for, a long period of time, but they will go up and down. It just depends on how actively, like, for example, Aterian. Aterian is very, very heavily manipulated. Like, there are shorts that ride this thing up and down, and they make money on it. And, like, their end goal is to try to get it to zero. But, it's one of these things where the lower the price goes, the more dangerous the stock becomes, because, retail is smarter than they were 5 years ago as far as all this stuff. So, and you have information now going. So, what's up, Carl? What's up, Fluffy? And what's up, Tom? Like, tickers on squeeze plays is basically a bunch of guys pumping a ticker, then selling it for 100% gains to FOMO retail, and then the ticker drops off before it actually squeezes. Yeah, it's kind of how it works. There's very few that actually really have good runs. Like, it's true. Like, it's because they make sure. The problem with small caps is they have so much power over them, because, like, look how much is actually on the line. Like, the short interest value is only 17 million. You guys realize, like, they, like, wipe their butts with 17 million. Like, these guys have billions of dollars that they, like, handle. Like, this is nothing to them. Being short 30 million on a stock is, like, slightly inconvenient. Now, it can turn ugly if they lose control, and that's what happens sometimes. And that's when they get nervous, and that's when they start, sending the bots and doing everything they can to, like, slander or, like, put a company to the ground. But, like, this is, the short squeeze game is very, very, like, high risk, high reward. And it's not for everyone. So, I mean, but yeah, so let's take a look at this, right? So you've got decent, like, you've got 30% of the free float shorted, right? It's been kind of holding that way. Like, you're basically, you've kind of maintained around the same. They covered a little bit, it looked like. But the cost to borrow on this is pretty low. And this is the only problem I have with this play, is the cost to borrow needs to go up. Because at this point right now, even though it says it's 100% utilization, the cost to borrow should be much higher. Like, I just want to show you something. Like, let's take a look at some of the squeeze ones, right? Aterian. Aterian's cost to borrow is 73%. Like, why is something that's, utilization is 100%? Why is something like Blue Apron only 26%, but it's at 100% utilization. Like, if shares are hard to actually find, then that cost to borrow should be rising. So, maybe it'll rise, but like it's, went from 20 to 27. So that is a slight improvement. But like, what are the FTDs on this? The FTDs are starting to stack up. So like it's not on the threshold. The lending is up on it. So like, I would expect to see the cost to borrow start rising on this. And then once the cost to borrow rises, that's when you actually have some like actual like you might have some actual pressure put on the shorts a little bit. Because the longer these things drag on, like Aterian's been dragging on for a while. Like, they've been shorting this and pushing it down for a while. Like, look at the chart. Like, retail's buying this, right? So like, you had this run up, but now it's back down. So they've had to push this down. Right? They got people to sell, but at the same time, when it sits down here in this is where it gets dangerous to like short. And so if you look, they're clearly having trouble keeping up with the shares, even though like they need to find more and more shares, and shares are hard to find. So that's why your cost to borrow has risen. Look at something like REV, right? So Revlon has much higher cost to borrow, right? 400% cost to borrow, right? And why is that? Because they only have they have 4 million shares short, but that's 80-something% of their float. So they're really having trouble finding these shares. And I would imagine their failure to delivers are pretty high. Yeah, you can see a real high spike there. And are they on threshold? Yeah, they're on threshold right now. Yeah. Investors bailing with 50 or 60% loss on that recent spike would have held for a year. Any sign of danger? Yeah. The T-plus system is garbage. And we also heard from Smart Money yesterday. If you guys were inside the Discord when we kind of talked to Alec and Adam, but Alec worked for Susquehanna, and he basically let us know, yeah, there's like a exemption that they can just file. I think he said it was like 144. I have to look it up, and I'll see if he can link it to me. But the idea is, he's like, yeah, there's like 6 different ways that you can get around, like actually, having to deal with shorts. Like, that's insane. But like this is the stuff we need to learn, because like we as retail thought this is a pretty fair game, and you talk to Smart Money, he's like casually like, yeah, there's like 6 different ways we can get out of this as Smart Money. So Rev warrants though. Yeah, so let's look at Rev. No. Rev doesn't have warrants. They have an ATM going. But it's 4 million shares. Here. So Revlon has dilution, but it's 4.6 million shares that they can issue out. Oh. So Apron, though, here's the deal. Apron's warrants are much, much higher. So they're not really a factor, because unless the stock price is over 15, 18, and 20, they can't issue out any of these. So the stock price would have to get all the way up to 15 to unlock these. So it's fine. But yeah, so like, let's look at this. Like, so for example, we've got Rev there. They've got a high cost to borrow. What are some other tickers that we keep hearing about, right? What are the other small ones? What's HUSA, right? HUSA's got a pretty small float. Let's see what they are at. Cost to borrow, 200%, right? INDO, that's another small oil one, right? INDO's 200% cost to borrow. What's the other one? Redbox. Redbox, I think, is like 1,000 or something, and 400% cost to borrow, right? Redbox. Redbox is 700% cost to borrow, right? And why is that? Right? It's because they sold more than the actual free float. And this thing would have squeezed all the way to the moon because the warrants they took away. And I warned everyone because of the warrants, because the warrants were at 1150, and I was like, you can't go higher than 1150. This thing's going to get crushed once it gets up there. And what happened was they went through a merger talk, and then they came out and said, we're suspending warrants. And at that point, I bought some because I was like, this thing can go to the moon. But as soon as I found out they turned off options, I just bought some puts, and I was like, yeah, I'm just going to hold these. So yeah, so like the cost of it's basically shorting one share for 1 year is your cost of like it's think of it as almost like your credit card APR, right? Like how much they charge you to borrow these shares. So if you were to borrow those shares, you'd be paying that much. Okay. So, why isn't it squeezing? Because they shut off options. So you took away the gamma, right? And I don't know how like this is legal because like I was looking at my put options, right? And my put options should be worth way, way more, but because there's no like bidding and no like because they are close only, I'm getting like crap for them, even though I'm deep in the money now. I have $13 puts on Redbox, and of course they're worth basically nothing because. So does cost to borrow really matter if they're shorting for only a couple months? Well, no, because that starts adding up, right? So every single time you borrow a share at 700%, yeah, like for them, they only the reason why they're willing to pay that much for Redbox is because they know there's a merger. So at the end, there's a light at the end of the tunnel. But think about someone like Aterian, who's been doing it for what? Like we've been a high cost to borrow for now 4, 5, 6 months, something like that. Like that starts adding up over time. So the question is, when you're holding 10 million shares, they're not that high. I think it's 8 million shares, but you're holding 8 million shares at like between a 20 and a 70 or 150 cost to borrow. Like that starts adding up over time. So you just have to like kind of realize that like, yeah, it sometimes because they're moving the stock price down, it's worth it. But if it starts trading sideways for a long period of time, is it really worth? Like, how much more can you eke out of this? Right, you're already at 210. Like, you hit the all-time low, right? Did it hit 210 or was it 211? That it was a low. What was the low today on Aterian? Was it 211? Yeah. Why is the price of Aterian going down so much? Is it because people sold? Is there hope for this play? Yeah. So here's the deal, right? For me, I'm looking at it long term as far as, do you care about a squeeze or do you care about the stock price going up? Because if you sell down here, you sell for a loss. Like 0% of people are profitable right now in this trade. So the question is, do you care about making money or do you care about a squeeze? Because this right here was not a squeeze. This was actually the stock moving up on like fundamentals and people being hyped about the stock. It happened on low volume. This was a squeeze, right? These two runs were squeezes. And then you saw that these guys basically, they went in heavy and then they've been shorting it since then. And they just want to get this thing completely down into the dirt. But here's the deal. The lower this gets, the more power retail has. And you notice it bounced perfectly off this line. That was the recent 52-week low. Now, the question is, do they continue? Like, if you keep going through and you see perhaps, let's see, like so I told you guys, I think in the Discord, 181 is roughly the number if you take the current assets and divide them by shares outstanding. So if you have that in mind, that's where they pushed it last time. They really wanted to push it down, right? Because at the time, I think 220 was roughly the current asset value, like 224 or something like that, and they pushed it down to 210. So like that's my guess where they're going to try to push it if the market goes all the way down. But remember this, the longer it hangs out down here, the more power retail does actually have. Yeah, I mean, like, this is highly manipulated, but here's the deal, right? Think about this. So you're sitting here trying to short at $2 a share, but the company is not actually going out of business, right? So the company still had, as of the last quarter, and we'll find out more in August 8th, I think, is earnings. So we'll see what the updated balance sheet looks like, and we'll see how their cash is doing. But if we're assuming that they're burning cash at roughly the same rate, we're going to find out how many months left they have of like clearance before they need to either raise money again, or we're going to see things that are slightly improving, or they're able to reduce costs. There's going to be a lot of things that we're going to be able to see on that next earnings. So the question is, do numbers matter as long as the stock goes up? Like, do the short numbers? That's kind of what you have to look at. Because at this point right now, being this low, you're more likely to have a spring and just a recovery into like maybe the 3 to 4 range, just naturally, just because the stock's been pushed down for a long time, and it's gotten to the point now where, you know, they don't want retail accumulating for a long time down at these levels. Because that's where you can start running into trouble. Because unlike a lot of other like penny stocks, because this stock wasn't a penny stock before, it's a penny stock now, but like this is a stock that was trading a year ago at like 40 something. Like, it got nailed by the shipping crisis, and they've had to dilute since then, not by force, because they actually violated a debt covenant. But since then, they've just been a target of shorts. So the question is, you know, if it gets pushed down into like the 180s, for example, you can buy a lot of shares for less than $2. Like, this $2 range is a weird place to be in, because every time it comes down into this range for a extended period of time, like if you look, this is the $3 down to here. It only lasted for a couple weeks before it ended up running, right? You get down here, you drop below like 3 for a little bit, and it came back up. Like, the 2s is a dangerous place for shorts to be, because if the company's not going to go out of business, you're allowing retail to accumulate shares really cheaply down here. So no. So I'm going off of just current assets. Current assets is cash, inventory, accounts receivable, and but like hard assets. I am basing that 181 off of that current assets. I'm not basing it off book price. So they are not valuing their software. If you actually evaluated their software and their like soft stuff, they have 313 million listed as assets. So they have a market cap currently of, what was the market cap today? It was, I mean, it's gross in general. It shouldn't be that low, but their market cap on Aterian, let's see. Market cap was 149 million with a listed 313 million in assets. Just, I mean, yeah. So listed assets 313 million, and you're coming up right now 124 million is their current asset price. So that's how low we are right now. So is the squeeze play over? No. I mean, look, come here. Here's Aterian, right? You still have 8 million shares short, which is 25% of the float. Anything over 15% is a squeeze play, like a potential squeeze. So, like, you have, and the cost to borrow is still high, right? Like 73% is not like 2% or 4%. Like, I mean, I've seen the cost to borrow on Aterian at like 5%. This is remaining high. So yeah, it's always in play. And how many shares are actually out on float, right? Let's see. Shares on loan. They still have 15 million shares out on loan. No, it's not. I'm not scolding him. I'm just saying, like, if you're asking, is just because this has gone down slightly, like we went from 13 million down to 8 million, right? Doesn't mean that it's actually over. All you're seeing right now is this has been reduced. They still have a ton of shares on loan right now. So, like, with the stock price being down here, you're going to see more failure to delivers if they keep pushing the price down, because the people who are out by now, like the only people, I don't understand the mentality of this, and maybe you guys can explain it to me, because this is how retail traders do it all the time, right? So look at this chart. So for months, this thing was just going down, bleeding. You get all the way down here, right, to 210. And people were like, I'm thinking about selling. And I'm sitting there going, you guys bought this stock $15 a share. And now it's sitting at 210 below book value, and you're scared of buying it. Like, because after all those months, it's now mentally in your head that this thing can still go lower. Even though I keep trying to tell people, I'm like, based off fundamentals, like, you now have to start looking at fundamentals at this point, because, like, at 124 million market cap, you are hitting current asset value. Like, and current assets are hard assets. Like, these are things that are like liquidation prices if you go below current assets. Like, you would actually benefit from the company going under and them selling off their stock, all their like pieces. You would make more money than what the stock is actually trading for. But that's not happening. So this company's still like viable and it's still like alive. But the only thing that's different is the price. So, like, what's the difference in value when it was up here and what it's doing right now? What's drastically changed on the balance sheet? If you compared Q4 to Q1 to Q2 in the next month, what's drastically changed besides the stock price when it was 7 or when it was 2? Nothing. Like, literally, not much is changing. The only thing that's changing is the stock price. And that's why people kept like, oh, you said stock price doesn't matter. I'm like, it doesn't fundamentally. Like, fundamentally, if you look at a balance sheet for the last 3 quarters, you basically see pretty much the same thing. Like, they're not that dissimilar. So, like, the question is, what's real and what's not? Like, the company's fundamentals. And I read something that I thought was super interesting. And this is where I kind of like try to put out this information for you guys. So check this out, right? If I can find this thing. It was basically a guy who went to a college professor and said, you know, tell me, you know, about like, what was it he asking about? Okay, let me rephrase this. So essentially, he went to all these different teachers and asked them, you know, okay, so tell me about like stocks and like why would someone buy a stock, like, you know, all this stuff. And the teacher, you know, he went to, you know, we're all like MBA people, and they told him the same thing over and over. It's like the definition of a stock, why you would buy a stock. But he went to a philosophy professor that he used to have drinks with at a bar in his college, and he like basically said, hey, you know, can you tell me what you think about stocks and blah, blah, blah. And he goes, well, you should work it backwards. He goes, why would someone sell a stock? So I'm posing this question to you guys. Why would someone sell a stock? To make money, right? But why are they issuing out shares of a stock? Anyone can chime in if you want in the chat. But the guy goes, you have to think about it backwards. So if you sell a share, you're selling it because you're trying to raise money because you're trying to continue and grow your business, right? So that's why people issue out shares, is to get cash so they continue to grow their business until they're profitable, and they want to do that. They're trying to raise money to keep business operations going, right? To the point where they're making so much money that they don't need to sell as many shares. So when you're in a growth company or a company that's a small cap that's trying to grow into a bigger company, there are certain things that matter to you more than others. And at this point right now, Aterian's been focused mainly on trying to grow revenue and trying to get more market share and get their name out there as far as their brands. So that's what the company really wants to do as like a fundamental company, right? So you're sitting here and you're going, okay, well, everyone pays attention to only the stock price, but no one's paying attention to what the company actually is trying to do, which the company is trying. And look at this run. So you had them start out here. They hit this low of 142, and then within a couple months and a couple earnings, they hit 48.99. So they hit $49, right? What was so great about this, right? This was a new stock, and they basically were like, oh, well, these guys have some growth going, like their revenue was growing, everything was great. What happens here? What time frame is this? Look at the time frame. So when did COVID happen? Right? What was the day that the COVID crash happened? COVID crash of 2020. It happened on February 20th. So let's look at February 20th. I guess February 20th, right here. Right here. So this was the COVID crash for Aterian. That's when it hit 142. February 20th, right? So here's February 20th. Aterian went from roughly $3 a share down to $1.42. And then they came up here when money started getting pumped back into the economy. They hit a high of 9, right? But then look at this. Then they go on this run because people are like interested in what the company was doing. And during the pandemic, they were making a ton of money, and they got all the way up to $49 a share. This is a stock that was at $49 a share and now is trading at basically $2 a share. And why did that happen? So why did it happen? Because shipping, right? The shipping crisis just nailed them. And that happened around here. So it was coming off its highs, and during here, this is when shorts started. Shorting was actually right around this time frame, because the shipping containers started getting really expensive. And they didn't just get like slightly more expensive. They went from like $3K a container, and these Aterian shipped over a bunch of big items, so they had a lot of containers that were going through. So their business model was set for basically these containers being only $3,000. Could they, handle a little bit more and less? Yeah. So, but the problem is they were growing and buying brands with the cash they had raised. So what they ended up doing is, look, they start getting shorted down. And this reduces their ability to raise money. So it gets pushed all the way down. And this earnings actually was a good earnings. Like, this was an earnings beat. But what happened? They pushed them down from like $8 a share all the way down to $3.04 on an earnings beat, before it hit a spring and just ran up to 20. Like, since then, shorts have gotten super aggressive, because this is right here. October is when Yaniv tweeted about naked shorts, and then these guys basically just started hammering the company. And they've been hammering and hammering, and then we had this run up to 7, and they've been hammering since then. Right? Like, so you guys have to realize what you're holding is a really highly manipulated stock. And so, for this particular one, we'll cover the other stocks too that you guys want to go over. I just wanted to explain, though, the timeline, what these guys were doing. And, this was a stock that was sitting at $49 a share, and it wasn't being heavily shorted up here, because they didn't want to short this, because this thing was on fire back then. So, oh yeah. So did you finish the professor? So basically what the professor said was, it was a philosophy professor. He goes, why would a company sell a share? Essentially, it's to raise money to basically fund business operations to grow the company. So why is Aterian raising money? It's because they need cash to continue doing what they're doing to try to grow their brands, grow their stuff, right? And this happens for every stock. Now, for example, let's take BBIG. Because I know, BBIG is a weird, interesting story about. So anyone that doesn't know the history of BBIG or doesn't know Ted Farnsworth, the guy started MoviePass, and he had a great idea, but they executed it so poorly that they basically were losing money the entire time, but the stock was flying because everybody was interested in them. And he's a great marketer, and he's got like good ideas, but the problem is they never actually make any money. And so that's the reason why I'm not like super high on these guys, is because it seems like every time they, do anything. So right here, this is a spring. So you hit this low here, and then it runs up to like $10 a share, right? Or $9.40, right? On a huge gap up, right? You're going to fill that, right, at some point. So, and that's what they do. And they have the little spikes up on a couple days. But what's happening during that time? It's dilution. So, like, they get these things pumped up, they dilute, and then they sell these shares into that. Like, and they had warrants that they were trying to unlock. And this is a company that used a lot of money. So they have tons of cash now, right? So, like, if you actually look, and let's pull over dilution trackers so you can see this. So BBIG, right? So look at this. So they had like 5 million shares outstanding for a long time, starting to build up to like 11, 14. They're basically using their shares to raise money. Then we get into 2021, and this is when it jumped from 30 million shares to 107 to 150 to 233. Like, they diluted the crap out of their thing. Why was that? It was to raise this cash. And what they're going to try to do is they're going to try to take this cash, and they're going to try to make a business out of it. But they did it at the expense of their shareholder. So some of you are fine with that, other people are not. And so money flow on ATER is basically where it was during the recent run up to 7. What are your thoughts about that? I think Aterian's going to go back up at some point, and I don't think they want to hold it down here for long periods of time. So I mean, I think it's going to see another run. Man, you don't know nothing. you don't know nothing. Yeah, like, so look, so you've got December warrants that are not registered, November warrants that are not registered, but these warrants right here, these Series Bs, they are registered, and they're at 265, right? Right. So, like, take a look. So, I mean, the nice thing about BBIG is they have a ton of cash, and that will last them for a while. It will last them basically like a year. But they've had so much, like, look at these warrants are at 4, and I think some of these got pushed over to was it Tide? I think some of them get pushed over to Tide, but they've used so much of these like dilutions to raise all this money, and it's been like at this point right now. I just want you guys to realize this, right? So let me show you something. All right, so let's go here. So we said how many shares do these guys have outstanding? It was shares outstanding is 233, something like that. It might be higher, but I'm just showing. Let's go off 233 million, right? So if the share price at 233 million is, let's say, what's it at right now? Like $1 or something? Is that right? It's $1.38. Right? So your market cap right now is around 321 million. So for this stock to go back up to, for example, even like 14. My dog's barking. Sorry. If it was to go back up to $14 a share, you're looking at like a $3.2 billion market cap. Like that, it's not going to happen. Charlie, stop. Wake up my kids. Hold on 1 second. Charlie. Shh. Shh. Come here. Shh. Shh. Be quiet. You're gonna wake up the kids. Sorry about that. Charlie, stop. All right. So here's my dog, Charlie. I'm looking through charts and those cheers, though. Charlie, shh. I think my wife might be home. I don't know if she had to take a cab. She was doing happy hour. But sell your dog to buy more Aterian. I don't think anyone would buy him. It's a pain in the butt. I love him, but he does bark a lot. All right, so, yeah. So, like, that's a huge market cap, and that's a huge, ask is to get that stock back up to that price. So if your average price buying in was like 8, you're looking at like a 2-point-something billion, So that's where I'm like, you'd have to really make a ton of money for it to get that high. And that's the problem with dilution when it gets that much. So my dog is going to wake up my kids. And I'm by myself. So I may have to like cut the stream short if that happens. All right. So I think my wife's home because he stopped barking. Okay. So what were we on next? Let me go back a little bit and see what you guys wanted to find out. Okay. You guys want to look at Redbox real quick? All right. So Redbox, all right, entertainment. So they had a decent day today, but I think they're just covering, and they still have a lot to cover, right? So if I remember correctly, let's go through and pull up Redbox. All right, so Redbox still has those warrants back, but they're at 11 something, I believe. Hey, hon. All right, so let's see. Yeah, they've got these SPAC warrants that are 11, and you also have these pipe warrants that are also at 11. So there's 15 million warrants that are back active, I guess. I don't know why, but they confirmed that was on the 17th. So on the 30th, so they have at least 1 million. They already exercised some of those warrants on the 17th, it looks like. So if the stock gets back above 1150, it could dump again. But we'll see, because at this point right now, the merger is going to probably send these shares lower. But you may have some covering until then. It just really depends on how long they can hold on. So, we'll see if there's continuation. If there's continuation, it's just going to be them covering some shares to get, to reset some of the FTDs that they're probably stacking up. Because let's pull over Ortex again if I can find it. All right, so Redbox, and they're willing to pay these really, really high cost of borrows because they know the merger's coming. So like they can hold on for another couple months until the merger comes out, and then they'll basically have all these things covered. And they're not borrowing that many shares. If you look, they're borrowing like 5 million shares at like, who knows, a couple 100% to 700%. But all they have to do is hold on for a couple months, and they'll be able to reset them all when the thing merges. So they don't mind holding through that. And basically this would have squeezed because the gamma, but they took away the gamma by shutting down options. So basically your brokers / the exchange screwed retail again. It's just at least they weren't as obvious because they turned off all options, not just the buy side. But yeah, I don't like that. I think that's dirty, and I'd be upset, if I had a long or bigger position. But I saw the writing on the wall, and I played the calls on the way up, and then I bought puts when it ran to like 17, and what about FSRD? All right, so FSRD, fast radius. These are their Class A's. Okay, so not a ton of short interest. You've got 73 million shares outstanding. Not a ton of dilution so far, but their issue is they're out of money. So the question is, yep, they're going to run it. So what's the stock price at right now? So I'll explain to you kind of how this works. So typically what we see is FSRD. When you have a company like this, you are allowed to, let me see, where is that? All right, so tiny amount of short interest, right? But they're probably going to try to pump the stock. And the reason why I say that is because what they're doing is, what's the stock price at right now? The share price? Is that like under $1? They're tiny, aren't they? Yeah, market cap 46 million. I'd have to look at the fundamentals behind this thing, but basically what I'd say is, I mean, this was a SPAC, I'm guessing, because of the $10. So if you had a SPAC that just basically is tanked, you probably will hit a spring. Probably, maybe this was a spring, and you'll start seeing some. But this basically is just going to be down here for a while, and then the underwriters will probably want to get their money out. So what they'll do is they'll start pumping up the stock to try to get some cash out of this thing, or they're going to have to dilute. So, but they need money badly based off this cash burn and the amount of cash they have on them. So we'd have to take a look at some of their 10Qs. Yeah, so like total assets, this is in thousands. Liabilities, yeah, so yeah, I mean, it's a small company, so but you may see them try to run the stock up to unlock some of those warrants, but that's a pretty long way to go. So they may dilute before then because they just need the cash, right? So they had the PIPE financing. They had some cash and net redemptions. So, yeah, you may see more dilution on this, but it's in this market. It's going to be. It's going to be interesting to see what happens because they're already down so low. I mean, you're talking about a stock that was SPAC'd out at 10 and then it's just been a falling knife. And that's kind of like a lot of these IPOs and these recent like SPACs that have came out. Like if you look at like DTC has been a falling knife essentially since it's been out. And I actually like these guys. I think they're going to do something. But like if you look at their chart, it looks terrible. Go show up on this one. Yeah, but I mean, they started out at like 20 something, and now they're down at like 4 and 3 and 4. So like, let's see, does it look a little rougher when you do this? Yeah, trading at 15. Now it's trading at 3. Like. Obviously, it's partly market, partly, but yeah, like a lot of these things go through this. So, what do you think about Amy? Is Amy something a competitor would want to acquire? Yeah, I mean, it's an acquisition target for sure, but the question is, do they want to sell? My guess is no. For Aterian, if that's what you're talking about, because of Amy. You think short interest will rise once we get above 3? Yeah, I mean, it could go. I would think they'd probably restart shorting it after like 350 to 4. because they can make more money there. Like, you need to let it run up and down. Like, you need to yo-yo it if you're wanting to make money off this, because they can control it because it's such a small cap. You need to let it run high, run low. Like, so there'll be other runs on Aterian and a bunch of these other small caps, is my guess. Okay, I posted an ATER stock and asked for an upvote. If you're still holding ATER, I got 516 upvotes out of 8K views. That's 6%. What do you think of that? I'll be honest with you. I think there's a lot of people right now on ATER that, like, just because they went through and clicked on your link doesn't mean they're actually, like, engaging. So I don't think that's a real scientific way of, like, viewing that. There's plenty of people also that are literally just angry about the stock, so they're not going to do anything. There's also probably a lot of people that see that and go, that's somebody that's karma farming, and I'm not going to give them an upvote. So that's my guess, is why a lot of people wouldn't do it, is because you're basically asking for karma farming on your account, and a lot of people on Reddit are big fans of not making sure they do that to people who are karma farming. So let's see. Yeah, so I covered BBIG a bit. They do have a bunch of dilution. We'll see. I mean, like, honestly, the people that are in that, they've diluted a lot on top of the BBIG shareholders, and there's a reason why I only own like a couple hundred shares down at 2, and I'm now even underwater on those. So, like, I thought I was getting at a decent price, but then they diluted more. And then I was like, all right, well, that's not going to be good for me. So, do you think ATER would do the same as ARK did recently? So, let me pull up. They landed some sort of, like, contract, didn't they? Is that the reason why they went up, right? It was like AeroClean. I think they're cash positive, aren't they? They withdrew their offering. They do have pipe warrants that are not registered. Those ones for June. So they haven't registered, but they have $11 strike prices on those. And then, what was it? ARC. No, ARC. Okay, I'm going to have to go soon, though, guys. And I know I didn't get to everybody's questions, but my wife's home, and it's also 11:30 now, and I've got to be up in the morning really early because I've got to work on this project for work, and I'm going to go into the office early. Yeah, cost of borrow is really high on them. They've got a good amount of short interest against them and a small float. Are they reg show? No, yep, they are a reg show. It doesn't show here, though, for some reason. It should, unless they just ended it. They may have just ended the reg show. Failure to deliver were pretty high there. Bet your thresholds, yeah. But utilization had that one dip. Yeah, I mean, they're definitely, like, squeezable. Like, that's not a bad... You know, they've got a low float. They've got decent cash. I don't know why you'd be that short on somebody that has that much cash. And they took away the pipe offer, or the pipe warrants. A1 offering may be terminated due to recent pipe. Their pipe warrant came out at $11 a share. And the stock right now is trading at what? Like... Okay, so they are going to dilute, and their share price is above the warrant price. So it's going to come down a bit from here. I can tell you that now. Like, the move was really from here to here. Now that they issued out these warrants at $11.50, and they're in process right now, it's with Armistice, of course. Same guys that have the ones on... there's like 3 or 4 of them that they put money in. But it's 1.5 million shares, which will be like, I would guess it'll be kind of down in this range then, once it's done fully diluting after those pipe warrants. But they can exercise them at any point at this point. So just be careful. Though there will be some selling pressure, not selling pressure, but just they'll be issuing those warrants on, which will naturally lower the price down. So I wouldn't be going hard here yet, unless they're going to plan on letting it run one more time and then issuing out those warrants on top of that. So it's really up to you guys, but I'm just throwing it out there as far as that information that they do have these warrants here, right? And they do have an offering that was withdrawn. So, but yeah, I mean, small float, high SI. It's a good recipe. So, but you have to get through those warrants first. And so the question is, are they going to run the warrant or run first and then issue out the warrants, or are they going to do the warrants and then run it from there once armistice is in? Mullen's diluted the crap out of. So here's the thing. I was on Mullen early when I thought that they were getting kind of attacked down, and we basically ran it from 55 cents to like $1.93 or something like that. And then I started reading more into what they were doing, and I was like, I don't like what they're doing here. Like, so they still have a ton of merger warrants, right? Or various warrants issued in merger, right? That's 126 million warrants, right? And they can exercise them at any time. Like, they also have these notes convertible, and they have an equity line they've already used up. Like, they at least have some cash now that will last them for a while. But they went from basically like 23 million shares outstanding to like basically, what's it at now? 325 million. Like, they diluted the crap out of their shareholders. So like, people are like, is Mullen going to squeeze? No, Mullen's basically just they screwed themselves. They only got $52 million for 300 million shares of their company. Like, that's not great. Like, you would have to be basically like a Tesla at this point to like have that come through there. So, yeah, I mean, BBBY, like, they look like they were going to turn around until this last earnings was like awful. And that's why they're so beat up. Now, the question is, as they're getting down here to these levels, is bankruptcy on the table, or is like, a squeeze possible because they're getting so low? Like, those are like the two options. And I'm not sure which way it's going to go yet. But like, if BBBY, like, I'd have to take a look at their, let's see what they look like. There's 35% short interest on them. They still have almost 70% of the float being held in long institutions. If you look at their filings, though, they still have, what is that, $4 billion in assets, right? 4.9 billion in assets, but the problem is their liabilities right now are 5.1 billion. So they have negative shareholder equity at this point, even despite that. So then you have to go into like, their net sales have declined. They're in like a rough spot right now, and they need to figure out a way of, making more money, or else they're going to get like either acquired by somebody, or they're going to, So, they looked like they were going to have a turnaround up until, but like, because of this and their share price being so low, they are actually starting to become like a squeeze candidate, because like, it's a pretty big name, number one. Ryan Cohen has a hand in this board, And so Ryan Cohen obviously is known for GameStop, but he also has ownership of BBBY. And so this is another one where it's like, now that the stock's $5 a share, is this actually attractive now to like people who are looking at like, okay, well, a couple things go this way. Ryan Cohen's on the board. He seems to turn around businesses, so that's the other option. So. No, I mean, Aterian was overinflated. Yeah, I mean, a lot of things were back then. But I'm saying, like, when the thing IPO'd, it basically, like, quickly went down and then it started getting pumped up. And so people were excited. It looked like it was interesting. Honestly, I think at the time it was probably worth more like $20 a share, but, like, it went all the way to 40. So, but, like, this is a stock that, like, should have been probably in that range at that time. And then it got just hammered after the shipping containers because they would have been cash, or they would have actually been positive last year, and they ended up not. So, and I will do one last one, and that is Mavis for you guys, whoever it was. Or Microvest Holding, sorry. Short interest 7%. 17% ownership. I don't see any like dilution on that, or at least none that matters. So, yeah, I don't see anything that's like super red flags on that one. Okay, I gotta go, guys. It's 11:30 here. I normally shut these down at 11. So, you guys have a great evening. If you're not part of the Discord, it is free, and you have every opportunity to come hang out with us. There a bunch of people in here have known, been here for a long time and hang out. I'll link it in the Discord, or the Discord link in the YouTube, and then you guys can join us. It's free. So, I will see you guys tomorrow. I will be bright and early in the office. So, you guys have a great evening, and I'll see you guys tomorrow.